William Lee joining in this morning. He's Chief Economist and Executive Director at Milken Institute for more on what the global market picture is looking like. William, thank you so much for speaking with us. Let's just start with what we've seen in tech results, major tech results from the United States. And, is it giving any sense that this worry about an AI bubble, etc., is overdone? Or do you think there's someone's concern there?
I've been struck that the people who benefit from the AI trade are clearly the ones who make the hardware. Jensen Huang and with NVIDIA, AMD has now got into the act. Even Intel has come into the act of sharing some of the benefits of this tremendous amount of spending by the hyperscalers. But, you look at the hyperscalers themselves, Meta, Microsoft, and Amazon, and so on, and Google, and you notice that they have not been so well treated. As you mentioned, the negative reaction we saw yesterday after the really good earnings is showing that investors are starting to ask themselves, your guys are spending so much money buying stuff. What on earth are you doing with it? Where's the productivity and the profits that are coming from this spending? So I think the people are getting nervous, not so much on the hardware side, because they understand that it takes a lot of investment to get the hardware that's needed, but they're questioning, what are you using the hardware for? And I think that's where Meta, Microsoft, and the hyperscalers are going to have to answer the question, why is your growth in capital spending exceeding the growth in revenues? And why is it continuing to do so as far as the eye can see?
And that's an important question to ask. The other question is, when does the other shoe drop? If you can call it that. But having said that, Mr. Lee, I'm just wondering whether your life is complicated quite a bit by the lack of data or the implication of the ongoing shutdown, which seems to have slipped into the background a little bit only because of the other big news across the world. But there is an implication of this. Do you think that markets will eventually pay attention?
As an ex-Fed staffer, I really feel for the people at the Federal Reserve Board having to do the forecast for Jerome Powell and the FOMC. They're really going to have to scrape every bit of data they can from private sector sources, interviews, and the Federal Reserve staff itself that goes out gathering a lot of the data. They're going to have to find out exactly what's going on with the labor market weakness and whether the stabilization that we've seen in inflation is continuing or is getting worse. In other words, are the fears of tariff inflation really going to come and bite us? So far, the evidence says no. The tariffs are nowhere near causing the inflation on goods that people had worried about. We're not seeing the stagflation that people are worried about. But the only slowdown, in fact, GDP growth is got a four-handle on it, according to the Atlantic Fed estimates. So the only weakness that we see that the Fed does worry about tremendously is the labor market. And even there, its issue is it supply or demand? So Chair Powell's got a real problem of trying to fess out what is going on in the labor market. And the rule that every economist is taught from the first day in graduate school is, under high levels of uncertainty, as he said, when you're driving in a fog, slow down and do less. And that's exactly what they're planning to do with December.
Okay. I wonder, William, good evening to you, that if the US markets were to reorient themselves, in that if the trade truce, etc., brings growth back, and therefore this whole drive by AI-led firms cools off a little bit. For now, it's an AI-led move in the US markets. Does it also percolate into emerging markets, in that people broad-base gains or positions in the US and out of US into other markets as well? Do you see that happening?
I think the leakage of gains out of the U.S. market into emerging markets, the channel is probably the clearest one, is going to be through AI hardware. There's not only the notion of national AI and corporate AI, but there's also sovereign AI. Every emerging market, whether it's Saudi Arabia or India or anywhere in ASEAN, every country is going to want to make use of its own national resource, which is the data it has within its borders. And to make use of that properly, especially in the modern world, you're going to have to be using AI algorithms of one sort or another. And you want to have the infrastructure with which to do that. And the data center requirements and the building and construction, as I said, the hardware makers are going to make out like bandits. The issue is, are national software makers and adapters of AI technology going to be able to do it? Singapore has gone way far out in advance in terms of developing its own AI models that have many languages for ASEAN nations. India, I understand, has done the same thing. So each country is going to develop the software, but the question that's being posed now to the Indian software developers and AI adapters are the same questions posed to Meta and Microsoft, which is, where are the applications and where can we start seeing some real productivity gains? Those questions still remain to be answered.
Fair enough. Absolutely. Thanks so much for joining us this morning, Mr. Lee, and look forward to the next chat.
Thanks for having me.